Have you been kicking yourself for missing out on the NVIDIA boom? Are you constantly searching for the next big thing in tech, but feeling overwhelmed by all the AI hype? Maybe you're an experienced investor looking to diversify your portfolio beyond the usual tech giants, or perhaps you're new to investing and wondering how to capitalize on the AI revolution without breaking the bank. Well, you're in the right place. Today, we're going to explore 5 under-the-radar companies that are quietly powering the AI revolution. These aren't your typical household names, but they might just be the key to unlocking significant returns in your portfolio, whether you're a seasoned investor or just starting out. Stick around, and by the end of this video, you'll have insights that could potentially reshape your investment strategy for the AI age. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Let's begin with our first pick, Oracle Corporation, ticker ORCL. Now, you might be thinking, Oracle, aren't they just a database company? Well, think again. Oracle has been quietly positioning itself as a major player in the AI space, and their recent financial results are turning heads on Wall Street. Oracle's latest earnings report for the first quarter of fiscal year 2025 blew past expectations, with Larry Ellison excitedly touting the rising demand for data centers as AI tech evolves. Oracle's enterprise software and cloud strengths shine, with a hefty 65.98% gross margin, proving it's highly profitable. And the stock has surged 46% in the past year, hitting all-time highs, yet it trades at a forward PE ratio of 26.6. Pretty reasonable for its growth potential. Analysts predict earnings growth of 11.3% in fiscal 2025 and 13% in 2026, but Oracle still faces fierce competition from Amazon, Microsoft, and Google in the cloud game. Keep an eye on the relative strength index. If it's above 70, the stock may be overbought, but if it dips below 30, it could be time to pounce. But before we proceed, here's a question. What's the one stock you'd never sell, no matter what the market throws at you? Comment your thoughts below. Moving on to our second pick, we have a company that might surprise you, Modine Manufacturing, ticker Modine. Based in Wisconsin, Modine is a thermal management specialist with a market capitalization of $6.8 billion. Now, you might be wondering, what does thermal management have to do with AI? The answer is everything. As AI systems become more powerful and prevalent, they generate enormous amounts of heat. Efficient cooling solutions are critical to keep these systems running smoothly and prevent costly downtime. Modine's strength lies in its low PEG ratio of 0.9, which signals both value and growth potential. A PEG ratio below 1 typically means the stock is undervalued relative to its expected earnings growth, so Modine could be an attractive investment. During their recent Investor Day on September 11th, 2024, Modine laid out an ambitious multi-year strategy that has investors taking notice. The company projects its data center revenue will grow from 12% of total revenue in fiscal year 2024 to a substantial 30% by fiscal year 2027. Modine's stock performance has been remarkable, with shares skyrocketing 162% over the past year. For investors, Modine's price-to-earnings ratio combined with its revenue growth forecasts make it worth watching. As it operates in a cyclical industry, economic trends and interest rates can impact its performance. So consider following moving averages, 50-day or 200-day, to identify broader market trends before entering a position. Sterling Infrastructure Incorporation, ticker STRL, our third pick, takes us into the world of infrastructure development. With a market cap of $4.5 billion, Sterling is a mid-cap company playing a crucial role in the physical construction of data centers across the United States. Sterling's ability to manage large-scale infrastructure projects provides multiple growth avenues, especially as demand for data centers grows. Analysts project a 26.6% earnings growth this year, which is solid, but don't forget that Sterling's business is cyclical, meaning factors like government spending, interest rates, and economic conditions can impact the stock's performance. Sterling's stock has surged 78.6% over the past year, reaching new highs. From a technical perspective, investors should monitor Sterling's gross margins to assess operational efficiency. Additionally, cyclical stocks like Sterling benefit from economic booms, but can struggle during downturns. Monitoring macroeconomic indicators and using tools like the moving average convergence divergence can help spot the best times to enter and exit positions. Next, we have Veritiv Holdings Corporation, ticker VRT. Veritiv is a key player in the data center infrastructure space, partnering with industry leaders like NVIDIA to build out the interior infrastructure of data centers, including the all-important server racks. Veritiv's momentum is undeniable. Its stock is up 132% over the past year, and analysts project a further 45% earnings growth in 2024. While Veritiv is trading at a higher forward price to earnings ratio of 34, it reflects investor confidence in its future growth. And keep an eye on Veritiv's RSI to gauge when it's overbought or oversold for potential entry points. Veritiv's strength comes from its comprehensive portfolio of infrastructure solutions, and its global presence puts it in a strong position to capitalize on AI-driven demand. However, potential investors should monitor supply chain issues and competition closely, as these factors could affect Veritiv's valuation and future performance. Finally, we have Supermicro Computer Incorporation, ticker SMCI. Despite its recent volatility, Supermicro boasts a compelling forward PE ratio of just 13, suggesting it's undervalued relative to earnings potential. The company recently announced a 10-for-1 stock split, which could attract more retail investors and increase liquidity. Supermicro Computer has experienced significant volatility recently, with a sharp 52% decline over the past 3 months. However, Supermicro's long-term potential lies in its ability to provide high-performance, energy-efficient AI server and storage solutions. Investors should look at the company's gross margin and earnings per share, EPS, to gauge its profitability. Since it operates in a competitive space, tracking research and development investments will be crucial to see if Supermicro can stay ahead of the curve. As shown in the table, these 5 AI stocks offer diverse opportunities across different metrics. Oracle stands out with a massive market cap of $461 billion and a solid 65.98% gross margin, making it a heavyweight in the sector. Modine and Sterling Infrastructure, with smaller market caps of $7 billion and $4 billion respectively, present unique growth potentials, particularly for investors looking for infrastructure-related AI plays. Veritiv, with its $38 billion market cap and consistent revenue of $6.86 billion, offers a mix of stability and growth, while Supermicro Computer, despite its $27 billion market cap, impresses with a whopping $19.90 EPS, reflecting strong profitability. These variations provide multiple entry points for different types of investors looking to capitalize on the AI revolution. As we wrap up our look at these 5 hidden gem AI stocks, remember that investing in AI brings both opportunities and risks. The tech landscape is always evolving, and today's leaders could face new challenges or disruptors. It's crucial to do your own research, diversify, and ensure your investments align with your financial goals and risk tolerance. Stock market volatility is real, and past performance doesn't guarantee future results. We've covered 5 companies: Oracle, Modine Manufacturing, Sterling Infrastructure, Veritiv Holdings, and Supermicro Computer, each with unique roles in the AI ecosystem. Keeping an eye on those building AI's foundation could be wise for forward-thinking investors. Before we wrap up, here's something to think about. If you could only invest in one sector for the next 10 years, which one would it be? Comment your thoughts below. And if you found this valuable, don't forget to like, subscribe, and hit the notification bell. Thanks for watching, and we'll see you in the next video.